Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. All right, this is the weekend edition. We're going to take a look at the stock market, last 2 days of action, and then we'll look at some weekly charts, look at the indices and indicators like we usually do, and then we've got a slew of ETFs we always look at, our key ETFs, and then some market sector ETFs. 5 stocks today. We're going to look at Biogen, Gilead Sciences, Amazon, Freeport, Mcclellan, and Pandora Media. All right, let's start off here with the Dow Industrials. So the Dow was down 163 points today. You can see we've been down 4 days in a row. Pretty good little downdraft. We're now back down below the 233-day moving average in here. My wave count still holds. I think we are working 1, 2, 1, 2, 1, 2, okay? Because this did not take out a high. So I think we're still working. And notice how this started to get pretty strong in here. This could be, I am looking for it to be a third wave, a third little I3 in here of the third minute wave down. So we'll see if we continue expecting this to break, to take this out. And it's interesting that I saw someone yesterday talking about retracement and talking about what percent this was retracing of this move here. Well, on the SPX, that is the case. I can see how you'd be looking for that, but not on the Dow because you have not had a higher high. In reality, the retracements you'd be talking about is this move. So you make this move down and you retraced this much. You made another move to a lower low. You retrace this much of this move, almost 100%, but not quite. And so that's because this wave is overlapping this one here. That's why we get into this 1, 2, 1, 2 type of count. All right, so that's the best assessment we've got right now. S&P 500. Now this is where they were talking about, okay, what percent is this move of this move? All right, but I am sticking with this count that I think we've got a 1, 2. And this is not, unless this turns up and dramatically moves to another and takes out this high, I'm sticking with the way this is going. But right now, this is sure acting in terms of the selling. It's sure acting like this is the direction it wants to go in. Let's see. Nasdaq. If you are watching my videos on Wednesday, I believe it was Wednesday or Monday, I put this up here and talked about an island top. And it may have been Monday. So this is not something I just drew in. This is not something, the brackets are here. These brackets have been here for about a week, I believe. And so now this sure looks like it's playing out, especially with this move that's coming down. We'll see whether we continue to get further move. New York Composite, it's still coming down. This is starting to look like this is playing out of this head and shoulders. And, I did have a little discussion on YouTube with someone who was commenting on the video from last week or Wednesday about head and shoulders. And he had the perspective that head and shoulders neckline had to be horizontal. It does not. You can have slightly rising and slightly declining necklines on head and shoulders patterns. And, I admit that a lot of times when you're looking at patterns, I've seen where some people see some patterns and call it XYZ or call it a head and shoulders, and I'll look at it and think, boy, I don't see that at all. So it is a little bit in the eye of the beholder kind of thing. The thing I like to look for when you're looking for patterns, especially a head and shoulders pattern, a topic pattern, I like to see some kind of symmetry. Okay, so I'm seeing that here, and that's why I put this dotted line up here, because I was looking for the right shoulder to come back up to about the same height as the left shoulder. It didn't quite make it. Now, can this still fail? Yeah, absolutely. This could come back up and go above this high and rally up, and then this starts to fail. You could draw a trend line across the top. It breaks that trend line, and this whole pattern just failed. There's no guarantee on anything. I mean, you set up a pattern, you take a look at it, and you think, well, okay, now I'm going to continue to watch to see does the market unfold the way I expect it to unfold. And if it does, then great. And if it doesn't, you get the heck out, or you got stops, and that's the way you play it. So when I look at this head and shoulders pattern, actually this looks like a complex. I mean, you could make the case that there's another head and shoulders pattern in this head. And a lot of times in complex head and shoulders patterns, that happens. All right. So now in this pattern on the New York composite, NYSE composite, I'm expecting, if this breaks, okay, it doesn't get confirmed until it breaks this neckline. If this breaks, this is the expected minimum move that I'm looking for. Now that's not even, you could say, well, wow, that's a big move. Well, it's not even taking out the low of October yet, okay? And I guarantee you, if this thing starts to get underway, it's going to go, I mean, all you got to do is look at China and everybody go, well, wow, wait a minute, we had a lot of naive amateur people investing in China. Look, that doesn't matter. Yeah, maybe there were, but, the emotional roller coaster will take over, and the herd instinct will take over if people start to sell. Look at the decline that happened in September, October. So don't tell me it can't happen fast. It can happen very, very fast. So I'm not saying it will. I'm just saying that, don't rule out and say that nothing is possible. Okay. You just need to keep all scenario. I'm not making a prediction. I'm just right now looking at what I'm seeing and saying, if this breaks, this is the minimum expected move. Now, if this happens, how long will it take to get there? I have no idea. And, and that's the one thing about the chart pattern here. It doesn't really tell you in terms of timing. All right, let's take a look at the Russell 2000. Now, it's interesting. Again, this trend line I had drawn the last time, okay? And so that would have been here on Wednesday, on 22nd. And I said, well, if it breaks this trend line, then we could be getting a swing move down, at least down to the 233, and it may go below that and, and continue down. But right now, it just looks like it's breaking down. Now, could we pause? Could we get a little snapback? Absolutely. Now, we haven't gone lower here on the RSI. And again, a little bit of divergence on DI minus on this move, but the move hasn't stopped yet. At least it hasn't shown us that it's stopping. Let's take a look at the weekly charts, the Dow Industrials. Pretty big reversal week this week. Okay, so the close, let me blow it up a little bit. The close on the Dow Industrials is the lowest close since all the way back here on January 30th. So we literally just closed below all of the last 6 months in terms of weekly closes on the Dow Industrials. And we'll see how strong this move happens in terms of continuation right now. S&P 500, a similar type thing, although not nearly as negative in terms of the close, but a big reversal of last week's action pullback. And it almost looks like that pullback, and I think I talked about this last week, pullback up to this neckline, up to the wedge that we've got in here. Now we've pulled back down. And let's take a look at the Nasdaq. Nasdaq, a little bit similar type thing. Although, again, the Nasdaq's been the stronger of all of this. But, we've got that price formation pattern I just talked about on the daily. We'll see whether or not we're going to get some continuation and this is going to change. But right now, it's still looking like, we've still got the upward trend and positive trend is in place. It hasn't really changed on the Nasdaq. The New York Composite, there we go, New York Composite Weekly. Again, this has been one of the weaker, and this is a pretty broad indice. And so now you can see we're breaking down in here, and this is the lowest close, again, just like the Dow, since back in January 30th in terms of the weekly close. And let's see if there's something else. Well, I don't see. Sometimes I write down notes and I'm trying to make sure that I remember to say something that I've seen because I've walked through all of this stuff beforehand. Russell 2000, okay, we talked about the trend line breaking, and again, very strong weekly action in here. And here you've got the Russell 2000. Did it close? Let's see. This closed 1228. We're below that close. It's just barely below that close. So this is the lowest close since back in March. So not quite as weak as the New York Composite or the Dow Industrials. All right, that's it on the weekly charts, and let's go ahead and dive in and take a look at the indicators. Okay, here's the short-term trading index, and the 10-day on it is 1.20. So we had a one-day reading of 1.52 back up here, but not an extreme like some of these other extreme things. But the blue is we're still right in the middle, so not giving us an extreme reading. See if I can find the VIX fairly quickly. Here it is. Okay, so this is interesting in that, let me get rid of the crosshairs for now. This was literally, I think with about an hour to go, this was trading up here around 14.5. And I really thought, wow, big bullish bar. And then we kind of sold back down a little bit, kind of like the day before. But still, a pretty strong move. I mean, this was way up here, and at one point intraday, it was at 14.73, and it's like, oh my gosh, this whole thing is just going to break apart. And then it really just kind of paused, with 90 minutes to go in the day, last hour and a half. I really thought there was a possibility this thing could crack wide open, and it just kind of paused. Didn't really do that. So, but this is pretty snapback, pretty bullish type action. I mean, you can see how it did it over here, getting back above that 10, and in a couple of days move, we'll see what happens here. The next one is the high-low. And that high-low has broken to a new low reading, minus 397 here. And we're down in this territory where it had in December. Okay, so this is the lowest reading in terms of net 52-week new highs minus new lows that we've had this year. We're back down to the December area. We're not quite to the extreme of the October reading yet, but pretty negative picture. And you can see how this has rolled over. And, I'm talking about in the post today, little write-up I've got, I'm talking about the Mcclellan financial guys have a chart and an article talking about their summation index, which is a sister index to the Mcclellan Oscillator. And they're talking about that picture, and that picture is very similar to what I was talking about at one point here a while back about the new highs, new lows. And so just, I wanted to keep that in mind in terms of here's what's happening with the new highs, new lows, okay? And this is not confirming the move of the market up higher whatsoever. And if anything, this is an indication that the underpinning of the market and the internals have significantly weakened. So I wanted to just point that out. So make sure you take a look at that article and the link I've got to that article in the write-up. All right, the next one we're going to take a look at is the Mcclellan Oscillator, and we'll go back to the New York Composite for that, and that's where I've got it. And the Mcclellan Oscillator's come down. It's not an extreme reading yet, and again, last, 4 times we had down in here, we got bounces. We'll see whether this is going to hold this pattern or not, and I'm really suspicious given what's happened on the 52-week high-low. And remember how I talked about M-tops? Well, this one just happened to be a nice little clear M-top. And so that was the perfect picture there. The next one is, the last thing I want to mention real quick on the indicators is the put-to-call ratio. The 10-day put-to-call on equities only is 0.66. So it's not on extreme. It needs to get down below, I think it's 0.55 I've got on a 10-day basis until I start to get where I highlight these in red. And this is what I'm talking about. This is my little chart here that I keep, and just kind of a running. So what I do is, let me get that back down. Oh, that's good. This is what I'm looking for. Okay. So, and I've shown this before. So what I do is I put the reading in I get from the Chicago Board of Options Exchange, and then I keep a 10-day moving average of that reading, okay? And I have certain levels of which I highlight, and you can see that when it gets into the red is when it's extreme bullishness. Well, I haven't had 10-day reading like that until back in July of 2014. Where we got these extreme readings that caused the 10-day to get really, really extreme. And I've got all of this colored, and you can see green, green for go, green for, it's gotten extremely bearish. You don't see any of that you know, you got to go all the way back to 2011, at the bottom of 2011, to even get one instances in August when the market was cratering to get the kind of reading that I'm talking about. And then you go even a lot further than that to get the kind of green reading. So these help just kind of one more little tool, arrow in the quiver, I guess, to help with the perspective on the market and what's going on. All right, let's take a look now at the high yield bond fund. Okay, the high yield bond fund has gone down with, you know, this was kind of leading a little bit and breaking down pretty strongly, and it hasn't taken out the December low yet, but it's getting close. And you know, you can see now here we thought maybe we're getting some divergence coming in, but this is where sometimes that divergence just doesn't hold, and if you extend the trend line out, it broke that. Let me get my thing. It broke it on this day, yeah, on Wednesday. It broke down through that trend line. So this is looking pretty weak on the high yield bond fund. TLT picture is getting a little bit clearer. I'm now thinking that what's happening here with this picture is that we're getting a like a fourth wave pullback in here. That's kind of, you know, it almost looks a little bit like it's hard to describe, a little bit like an A, B, C type thing that's happening, and we'll see if that plays out or not. And so now I'm labeling this as 1, 2, 3, and possibly a 4. But again, I've got this trend line here that I'm watching. It would need to stay within that trend line and below that trend line if it's really a fourth wave. Well, it doesn't have to, but that would be a guideline. I mean, just the only guideline is the fourth wave can't go above this low here that I've got as marked as wave 1. So it won't go above 126 from an Elliott wave count perspective. But anyway, that's the way TLT is currently looking. So a little bit of a pullback, which means, you know, interest rates, long-term interest rates have been dropping if the bonds are rising, okay? The next one's the dollar index, which really didn't do a whole heck of a lot. It was up 0.044, so we're a little bit of a stall out last couple of days in here. Still sort of struggling. The move higher is a little less dynamic in terms of what's going on here in this fifth intermediate wave up. Oil. Where is it? United States oil, here it is. Okay, so here's the thing about oil. I'm starting to get a little bit of divergence showing up on RSI. I think all three indicators, yes, DI minus and the demand index. Okay, so it's possible that oil, it's gotten all the way down here, getting ready to come near the testing this low. It's possible that we're getting ready for some kind of a bounce. I'm not saying it's a major bottom. I'm saying we could get some kind of a bounce in here, so we'll have to watch for that. The last one is gold on the key ETFs. And where are you? Here it is. Okay, so gold had a big reversal type day on Friday. My only caution is it hasn't really hit the support areas I identified earlier in the video, earlier in the week. And my caution about this type of bars, I have seen this type of bar fail or not have much of a response before. I mean, if you go back, where was it, May of 2013, I think I'd seen something. I mean, look at this kind of a bar right here. You'd think, well, wow, we're getting ready to take off. And all it did was kind of slightly move up to the right and roll on over hard. Now, here's another big bar, and then it bounced a little bit, pulled back, and then took off. You never know. You need some confirmation. You definitely need a close above that high and then some kind of continuation on it. But it is definitely a noteworthy bar to pay attention to. You know, I'm not saying to jump in by any means. I mean, we're definitely in a strong downtrend. So, you know, if you were to do it, you got to make sure you put a stop down below this low here if they takes it out. The next thing we'll take a look at is the semiconductors, and semiconductors really look like they're breaking down. Here we go. Semiconductors have broken down below the support that I had identified here. Now we are getting a little bit of divergence showing up. We'll see if that divergence holds and causes, or getting it here on DI minus too. getting it on all three indicators. So it's possible that we could get a little bit of a bounce back off of that. Again, just something to be aware of. And the home builders. Home builders are, big downdraft day. There was disappointing new home results yesterday. It was below expectations, and then they revised the last 2 months down also. So that was a big negative, and that caused the home builders to pull down. But you can see this has just been in a big sideways type move here. We'll see if this starts to break down like the semiconductors, because these are some of the key market sectors that you're looking to see. Does it turn down, with the key market indices turning down or not? Semiconductors clearly have. This is kind of going sideways and has been going sideways since February. Okay, and I mean, look, it really, you can pretty much just draw a line right straight across there. And the last one we'll take a look at, well, two more. Energy Select, and, well, no, actually, I've got three more. We just got started. Biotech is what I want to look at next. All right, so Biotech, because they had some big down days, Biogen and several others, so it got whacked pretty hard on Friday. And you can see it's, the trend's still up, but it looks like it's breaking down. We got this divergence on the RSI, showed up during the week. And some of these ETFs, I don't watch them a whole lot during the middle of the week because I'm not trading them. But I'm going to be watching that one to see if it rolls over. Energy XLF, or continuing to roll over anyways, what I want to say. Energy, where are you? Here we go. Okay, boy, did this has smashed last 5 days. This has really smashed down below this low and this range in here. We'll see whether or not we get this distance and we move that far lower. Right now, it's sure acting like it wants to. And, we're back, back down into the 2012. I tell you what, there's a lot of stocks that are a lot lower than that. Some stocks are below where they were in 2008, 2009. So they're really smashing the commodities, as that's gotten a lot of publicity too. So financial select sector. All right, so broadening top. This is not something I just put in. I put it in 1 or 2 videos ago. Okay, so this is something I had drawn up here, and it does look now like it wants to come back down, and we'll see whether we get the continuation down off of this move. And now it's got a ways to go before this top is actually confirmed. So we'll just see if we get the continuation. That's all you can look for. Is again, like I've talked about with the patterns, you identify a potential pattern and you say, okay, is the market continuing to act according to the way that I expect it to with that pattern? If it's yes, then you continue to play out according to the pattern guidelines. If no, then you scratch it and move to something else. That's all you can do. I mean, you're not sitting here. No one knows what the market is going to do. All right, that's it for the financials. Now we're going to take a look at our stocks. Okay, the first one we're going to take a look at here is Biogen, and of course this dropped 22% on Friday. So now you know how everybody in 1987 felt when the stock market dropped 22% in one day. And this is exactly what just happened to Biogen. And now when I look at this, here it was a gap that just got closed with this price action. And of course, we just created a huge gap on the downside. But now I think we got a potential support zone of 290 to 298 down below the trading range in here. If this doesn't hold, the next support area to me would be 270 to 275. And so that's what I'd be watching for. If we get support comes in and this snaps back, I would suspect that because of the volume that happened on this day, creating this gap, that I'll bet as you get to the top of this bar and to the top of this gap, at the bottom of the gap, top of the bar, you get selling come back in. I think this gap is going to be fairly strong, but that's just a suspicion. Right now, we just have to watch the support zones. So pretty strong hit on Biogen. Pretty strong breakdown, but it's had a pretty big run too. Pretty big over the years here. All right, next one is Gilead Sciences. Okay, so this also had a big move down. And on this stock, I think that I've talked about this before, I think we've had 5 major moves up, and I think we're topping. And this, because of this 3-wave and because of the way this price action acted in here, I think this is an A, B, and that we're doing a C coming back down, which to me, if that's the case, is going to, at a minimum, I'm guessing would come back down to the bottom of A. And so we'll see whether we get that or not. We're starting off on that move. Of course, it's going to have to take out this trend line that we've had, which is kind of support. And here's the 233-day moving average. So right now, I'd be looking to see, does this trend line hold or not? And right now, I'd be looking to thinking that it's not going to hold. But that's what I'd be watching for on Gilead. Now let's take a look at Amazon. All right, so Amazon on a weekly basis. Amazon's had a big run, and I think we're in a 5th major cycle wave up. And we're talking about 5 waves up from basically when it first started trading, okay? Had a huge wave one with the whole .com thing. Amazon kind of topped out, almost like did a double top up here in 99 to 2000. Big pullback. We've had this big run 3. Now you'd look at this and say, well, wow, is that really a 4th wave pullback? But when you measure it from the bottom here to the top of 3, that actually pulled back a little over 23.6%, when a lot of times, if you have a deep 2nd wave, you get a very shallow 4th wave. So that doesn't surprise me. Now, when you look at this and take the semi-log off, you can see, well, wow, yeah, that does look at the deep retracement, and look at this, looks like a pretty decent pullback of this big, strong wave 3. And look at this wave. Is that going, basically parabolic, or I don't know. I need to come up with another term, rocket man move or something. I don't know. There needs to be another phrase for that. But let me put it back on semi-log, and we'll take a look and zoom in at this a little bit closer on a daily chart, because see if we can't get a better picture of what's going on. So if we look at this and think, okay, the 4th wave has pulled back and stopped down here, I thought that we had gone 5 waves up here. I really thought maybe we had a 1, 2, 3, 4, and this was 5th, and that we were getting ready to peter out, and that was it. Well, clearly that was not the case. And so now my best assessment of what I'm seeing in here is this 1, 2, 3, 4, and 5. And so if this is 1 and this is 4, and drawing a trend line, creating this price channel that you see, which is pretty clear, given that we've got, 2 points here for this, and it's all parallel and all that good stuff, there's a real good chance that this thing basically topped out right up in here on wave 5. So I'll be watching that, and honestly, the kind of price action we got and the volume and everything else, it really makes me very suspicious. This just looks like a blow-off type of move. And then when you look at it on an arithmetic chart, this is semi-log. You look at it on an arithmetic chart like we just did on a weekly, you can see how it's just a straight up move. This entire from here to here looks pretty straight up when you take off the semi-log. So that's what I'd be watching for. Be a little bit careful. And if this is an exhaustion gap, it should get closed within the next, 3 to 5, maybe 6 days. So that's what I'd be watching to see if that does. If they close that gap real quick, then this move's probably done. All right, that's Amazon. We're going to look at Freeport. Where are we? Freeport. McMoran is how I pronounce it. And where are you? Here we go. Okay, Freeport, boy, is really, of course, this is commodity related. Copper, gold, all of that, and it is really getting whacked. And pretty strong move down. Seemed like there was some, I wanted to compare to January. No, I don't see it. Let me look at something else in here. Oh, I think what I was looking at is that you can see how there was some divergence that was coming in here with this big move. We had the big move. Oh, here's what it was. Here's the thought I had on it. look at the volume that happened here in January on this move down right here. Okay, then you rallied back up, and then you got another move down that wasn't confirmed with the divergence. Okay, so I am thinking that with this huge capitulation type volume, that kind of action might form. We might get a little bit of a pullback and then go to a slightly lower low, but it doesn't get confirmed by the indicators. Okay, so that's one thing I'm looking for right now to watch this price action, because it really looks like it may have gotten to an extreme. I did want to show the Freeport. I've got a weekly chart of Freeport too, FCX here. Okay, so let's look at this, and you can see we're really, I mean, it's starting to approach. Here was the lows that happened in December of 2008 down here around $9.2 interweek low. So it's coming down. It's at 12.29. So it's pretty big drop. We'll see whether or not we get some support coming in on this thing. And if you draw, and I hadn't done this, but if you draw a trend line across that, you will see that on a weekly basis, that's probably why it fell out of bed. That long-term trend line just got smashed. Okay, that may be one factor is what I'm saying in terms of contributing to some technical selling that kicked in. Let's take a look at Pandora. Pandora Media, here we go. All right, Pandora is in we're getting some bullish divergence showing up on this move, and that we got the big pop on Friday, huge volume. And one thing I want to just, what I'm seeing here, this is all the trading. Yes, this is all the trading on Pandora. So it had this big bullish move. Now we're coming back down here. It could be just a corrective wave that's happening. And there's definitely a channel. Okay, there's definitely been this declining channel that's going on in here. And this is a parallel line to this trend line I just drew right in here. So I'd be watching to see, does it take that out or not? But right now, I mean, all the moving averages are aligned to the downside, and you get 1 day pop. I'd be careful with that, but it could be in the process of turning around. I mean, we're just, this is just short-term divergence that's occurring, and of course, here's what happened as a result, or, didn't get it on the demand. Let's see if we got it. We actually only are getting it on 1 out of the 3 indicators, so I'd be a little bit cautious about that. But anyway, you've got the channel. Before you get extremely bullish on it, to me, you got to break out of this channel and go to a higher high, and then start looking for some kind of price action to reinforce that. But right now, we're still in a downtrend. All right, that's it for today. Those are a lot of stuff to cover. A long video. Weekend videos typically like that. So if you're watching the video anywhere else besides my website, head on over there, check out the post, and if you're not a subscriber, subscribe. Gives you access to the Trade Ideas webpage, and take a look at the education courses I've got out there also. So until next time, stay focused, follow your plan, trade without fear, and we'll talk to you on Monday. And actually, for subscribers, I'll have a Trade Ideas video out probably by Sunday evening, late afternoon on Sunday. So we'll talk to you guys then. All right. Thanks, everyone. Have a great weekend.